Okay, so let's have a look at Melba 2015 company question. So the first adjustment that we have are stocks on the 31st of 12th 2014. Our cost were 80,400. This figure includes damaged stock, which costs 6,600. So because the stock is damaged, we're going to take it away from the 80,400, but now has a net realizable value of 3,200. So we're going to add that 3,200 back on. So we're going to take the amount, and that's coming straight from the question itself, which is 80,400. We're going to take away the damaged stock, which is 6,600. And then we're going to add on the net realizable value. So the net realizable value in the question then is 3,300 or 3,200. So that's going to give us a figure then of 77,000, and that's going to go into your balance sheet as a current asset, and it's also going to go into your profit and loss account in your trading. As part of your trading and your balance sheet as part of your current asset. Now the way I've done these adjustments here, if you can find a quicker way of doing it, you can. So you can also go 80,400 minus 6,600 plus 3,200. It might be quicker than doing the way I do it. I'm just doing this for the purposes of the video. So that's how you do the first adjustment, your closing stock, taking away your damaged stock, adding on your net realizable value.